Greetings, everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely check out the website at cubicleinvesting.com. So today is April the 10th. It's approximately it's 10:03 a.m. Eastern Standard Time. The market has been open for a little over 30 minutes. I wanted to show you guys a trade that I got into right out of the gate as the market opened, because I saw that because of the CPI number that came out today at 8:30, it was slightly higher than expected, but nothing from my perspective significant. But nonetheless, right now the market is very sensitive to anything inflation related. So because I saw that the futures, that the ES mini had dropped pretty significantly as a result of the CPI news, I knew that once the market opened, the SPX will be down significantly, right? So as you can see right now, it's down a little over 1%. And so I immediately got in. And again, I'm always looking to go on the side where the SPX has moved, right? And so it's moving down, in terms of value. And so I sold the 50.90 on the put side, and 50.85 I bought, right, to create a credit spread. And so 14 contracts, of course. And the great thing about this is, so I always tell people that money is an abstract form of energy, right? So money is an abstract form of energy. And so when you see these large moves like this, that takes a lot of energy, right? For the market to expend. And so what you want to do is, at least this is my strategy, I want to use the market's energy, or the SPX's energy, against it. In other words, if the SPX has used a lot of energy to move to the downside, as it has this morning, well, then I'm going to the downside. Why? Because that energy that has been expended to the downside is probably, for the most part, exhausted, right? For the most part, and I could still drop a bit more, but based upon the expected move for today, you're talking about a move that would be greater than 2 times the expected move for it to drop down to 50.90, and that's just not going to happen. But I don't believe the probability of that happening today. I think it's very low, considering that the CPI number was not that, although it's higher, it wasn't high at all. It's just showing that inflation right now is sticky, right? And so, and actually what the Fed may come to realize is that 3% inflation might be the new 2%, because the 2% inflation is their target rate, right? So they might realize that 3% has become the new 2%. But nonetheless, going on the put side after this really large drop, let me just as you can see here, when the market first opened, the Bollinger Bands are extremely wide. Why? Because volatility, the expected move of volatility, is very high. And so this large red candle on this 1 minute time frame was outside of the lower Bollinger Band. So anytime you see the candlestick or the price action outside of the Bollinger Band, and the Bollinger Band is not facilitating that outside move, you're going to see eventually the SPX begin to move back inside of the Bollinger Band, right? Because the Bollinger Bands, the way I have them set up, on the outside, below or above, represent a 2 standard deviation move, which is pretty significant. But having said all of that, as you can see here, the SPX is beginning to move sideways. The RSI is beginning to go back up in value. And so what did I get for this trade? So I got 35 cents for this particular trade. So you're talking about 35 times 14. So I'm in this trade for $490, right? So that's my credit. That's the premium I took in for this trade. Again, a very high probability trade, right? And so I may actually but I'm very cautious right now because we may get a significant bounce, right? A bounce that actually may go back up 1%. So I don't want to be too quick about putting a credit spread on the call side to take an additional credit, because I'm just not sure about how much higher the SPX is going to move, right? Because it's only 10 o'clock, so it's still early in the trading session. But again, this is something for you guys to think about. When you see these large moves like that, like we see now, like we've seen, it's a great time to actually trade in that direction. So a large drop, my strategy, I want to be on the put side, and I'm looking to get well below. If you want to look at it in terms of a high probability trade, you get well below 60 points below the opening price. So hopefully this helps. I may come back and do another video segment to show you guys where the position is later on in the trading session. Hey guys, I'm back. So I just want to give you guys a quick update. So as you can see here, looking at the market internals, we can see that at the recovery, so the SPX is beginning to rise ever so slightly from its low today of 51.44. Now it's at 51.65, and we also see that the ADD, the Advanced Declining Indicator, which is part of the market internals that I look at, is also rising along with SPX. So again, anytime you guys see these large drops, definitely it's a good time to get in and make some money. And